You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time for a rockin' show. Yeah, it's time for the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the fun, the interesting, the compelling Options Insider Radio Network. If you like streaming it from our website, theoptionsinsider.com, good news for you. We just updated all of the players there. Makes it even easier for you. I know some of you were saying it was hard to find this or that. Well, guess what? All fixed. So you guys can go to the main network page, or you can go to the page of the show of your choice. There's a whole call out there right on the right-hand side of the homepage. Pick your page, pick your show, pick your episode, and you're off to the races. Of course, you can always find it at iTunes, TuneIn, Stitcher, our app, wherever you like to listen to our fine programming. Of course, we also encourage you, if you're around, we know you hardcores like to tune in live, where it's available live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlrs, MIXLR. Grab that link, set it and forget it. We'll explore adding other venues to that down the road. Maybe some Periscope, maybe some Facebook Live. Who knows? All those have a video component, so we got to work that out. But maybe we'll experiment with some other outlets for you guys as well. But right now, the audio's up there. Right now, coming to your ear holes live on Mixlr. And of course, however you listen, hit us up. Questions, comments, insights, pearls of wisdom. We do actually enjoy hearing from you guys on occasion. All right, joining me on the old program today. Let's kick it off. Who knows where everybody is? Let's just find out. Let's start off. Let's go out to, usually he's out there somewhere around St. Charles. Today on Mondays, who knows? It's a crapshoot. Sometimes the man actually moves, and today he is Mr. Uncle Mike from RCM Wealth Advisors, a.k.a. the Skew Fund. Mr. Uncle Mike, welcome back to the show. Where the heck are you today?
Broadcasting live from St. Charles, Illinois, right next door to the St. Charles Historical Museum. Sky is the limit and space is the place.
I thought you sounded good today. So there you go. Uncle Mike back in the Mecca for all things that is St. Charles, including water gardens and pickles and whatever the heck else we discovered they were lying about out there in St. Charles. A conversation for another day. And also joining us from, who knows, perhaps right down the street here in scenic Chicago, or maybe somewhere around Detroit. Who knows? Maybe from a bus station near you. We are joined by the Greasy Meatball, Mr. Mark Sebastian. Mr. Meatball, welcome back to the show. Where the heck are you today, sir?
From the Central Transportation Hub for Greyhound Busing, I'm Mark Sebastian. No, I'm kidding. I'm in Riverside today. I was planning on being downtown, and then just a comedy of errors today. So the sitter was sick, the older boy was sick, the in-laws are sick. I'm healthy, but that's been about it. So I've been on diaper duty to go along with my financial duties. And in between, I tried to make up some time to actually get a duty and barely slipped in at around 10 o'clock.
Well, there you go. Thanks for that update, sir. A little TMI as usual, but what can we expect? But, you know, you're right. There is something toxic going on in the neighborhood these days and in the environs. If you have small kids in and around the Chicago area, chances are you've seen it or you've been felled by it yourself. I've been fortunate to have not encountered it yet myself, but I could see it lingering. It's lurking out there in the shadows, waiting to pounce. So before it does, let's get rolling with the show. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's rocking, what's rolling in today's market activity. Got a bunch of stuff going on today, including some looking back and some forward at some earnings and some other stuff on the old docket. Your questions, the ever-evolving debate about crypto, all that fun stuff coming up. Let's kick it off, seeing how we fared today in the old broad markets. Kind of a mixed bag, bit of a pick your poison kind of day. If you like something, chances are you could look hard enough and find it. If you wanted a little bit of green on the screen, well, you can go to the tech-heavy NASDAQ, which was slightly up on the day, or you can head out to VIX land, where they took a nice little weekend back in plus, heading out nearly 0.8 handles on the upside, so right around 1060 or so, closing out the day on the VIX cash side. And of course, the S&P and the Dow playing the red game today, both off almost half a percentage point on the day as well. So a bit of a pick your poison. A lot of stuff popping off we can get to. But before we get to that, let's see what caught everybody's collective eyes. Let's start with, let's go back to St. Charles. Let's go see what was cooking and what was catching eyes out there in the realm of St. Charles.
Well, what was catching my eye on the macro level would be, let's see, some people were indicted for doing some stuff with Russia, and that. Flooding the news today. Some Trump senior campaign officials. There is some money that's just kind of happened to not be in the right spot, and the government doesn't really like that. Now, of course, they haven't been convicted as of yet, but so they deserve their day in court just like anyone does. But that's one thing that's definitely flooding the news today. Just on that, I think that's kind of, I hate to say that's what's responsible for the down move in the market, because the down move really isn't that much of a down move. We're down 1/3% on the day today in the SPY and the S&P, and that's really not that much, quite frankly. So I can't say whether that's what's causing things or not, quite frankly. It could just be a pullback from the all-time highs we set last Friday, or it might just be the market finally had some bad news and said, well, what the heck, let's go down. Who knows? So that's one thing that's catching my eye today. The other thing that's catching my eye today is holy Apple. That is just moving and shaking.
Yeah. That was they were not messing around at all.
No, they are not. And curious to see, we got earnings for Apple coming up on November 2nd, and that is the true day for earnings for Apple, not the Mark Longo day that he'll probably tell you already happened 10 minutes ago or something like that. Mark is a very honest, upstanding person, except when it comes to Apple earnings, for that with which he cannot be trusted whatsoever. So that's one thing that's definitely catching my eye at this stage in the game. My beloved metals are relatively flat on the day, and just a little bit of a down move today. So with that, I look forward to hearing the commentary from the VIX from Mr. Seabass.
Well, how about the Russell 2000, which got destroyed today? Absolutely obliterated. At one point, actually closed down. It rallied in the end of the day to close down only 1%. At one point, it was down almost 1.5%. And with that, it had almost pulled the S&P into kind of a tailspin, pulled itself out, pulled the NASDAQ red briefly. The Dow looked ugly for a while, but things kind of recovered as the day, midday, and we ended up kind of having a nothing burger in terms of volatility. VIX futures were up marginally, but, you'd expect that on a down day. But I'll tell you, the Russell just getting pounded, and I believe the reason – this was what I got from the people, was that the phasing in of corporate tax reform spooked the markets a little bit, and that was what had kind of drawn things down. But it was a weird day. Market kind of got to about flattish, and then right around the European close, which is 11:30 Eastern time, we saw some real heavy selling. I just assumed it was traders selling the European close, and then in what is a really weird pattern, it kept going. That's not something you usually see. But what happened was, it just so happened that the the negative announcement on kind of the tax reform thing happened to happen about the exact same time. So that allowed kind of algos to push things. And believe it or not, we settled almost exactly kind of where we were at 11:29 Eastern time. If you've track where markets are, then after hours were completely unchanged. So just an interesting day. And as Mike said, we got some huge moves out of the companies reporting this week. Apple was up over $4 at one point, about two and change. You had Alibaba up over 3%. Facebook made a nasty move. It was up almost 1.5% at one point. So it is really interesting. But Mark, if you look at the performance of the S&P equal weight versus the S&P cap weighted index, it is like night and day. If you're watching kind of equal weighted trading, it has not been that great of a year. It's only been the kind of top market cap companies that have driven things to kind of the levels that we're seeing right here. The S&P is at an all-time high, but it's been driven by kind of lest we joke, the 1%, or maybe the 2%.
That's been that way for
the equal weighted index stinks.
Seems like it's been that way for a while, hasn't it? Like a couple of years now, where if you just played the top 10 or top 20 of the S&P, aka the Apples and those ilk, you got 80 to 90% of the move without all the rest of the nonsense. So yeah, if you play, I don't think they have. Is there a dogs of the S&P? I know there's dogs of the Dow. Obviously, is that a thing? Dogs of the S&P.
There's definitely dogs of the Dow. I've never seen dogs of the S&P. That's not a bad idea, but it's basically value versus growth. But I'll tell you, it's been it's been just terrible. I mean, it's not been that good of the year. The 1 year for the S&P equal weighted, so is year over year. Let's see, 3304 to. It's up a little, but not nearly like the S&P 500 is. It's up about, that's from 2016. I'm sorry. Yeah. So, it's up, 18% year to date. That's not terrible. But, it is not the same as what we've seen in the S&P 500 itself, which is just blowing the doors off. And the last few months, it's been even worse. If you look at kind of July on, we're only up about 100 points. So it has not been a great time to be an equal weighted index. In fact, from the 3-year annual return is 8.4 for the equal weighted, 5 years 13.3. You look at the S&P 500, its 3-year is what? It's up like 1,000 points in the last 3 years. I think you're talking about almost 20% a year move in the last 3 for that index. So it's been rough on equal weighted, and that it won't stay that way forever, but there's definitely an issue there.
Mark, I think we found your new direction there for Carmen Line. What do you think? Dogs of the S&P? You liking that?
It's
you liking
not
that?
Bad. We're in the middle of launching a broad cap index type fund. So
there you go.
Maybe
scuttle all that nonsense.
Piece of it.
Scuttle all that nonsense.
So.
Dogs of the S&P 500. Maybe we'll have to change it. Maybe we'll call it the slow hogs of the S&P. Hogs of the S&P. I don't know. We can do both. Dogs and hogs. Now we're getting exciting over there. But tell you what, you're mentioning all this activity in the Russell 2000s. Whenever I hear that, whenever I see those disassociations between the Russell and the other broad indices, my eye inevitably looks over to our old, much beloved, much bemoaned friend RVX. These are the times when RVX usually lights it up, when there's disassociations going on out there. So RVX was lighting it up. I just pulled it up today. Take a guess, sir. Take a guess at the contract count for RVX today.
I'm going to go out on a limb and say 5.
Whoa, don't get crazy. Come on.
I mean, it is. I mean, if you look, the RVX moved a ton today.
I know it did 10%, percent.
I mean,
and yet it traded
just...
it traded 0 contracts today. Yet again, it's a shame. This thing we used to talk about it years ago on Vol Views. I will say I have talked to the Russell folks over there, and they do seem like they're looking to reinvigorate this product, because a day like today, there's no reason why this thing shouldn't be trading and only have 245 contracts open. This thing should be lighting it up today. So maybe this is the product we shall discuss evermore here on the old network. But I did want to bring up that plug really quickly. Uncle Mike, so let's look back really quickly too, because we were talking about earnings and things, and there are some popping off, mostly popping off tomorrow, so we'll get to those in a little bit. I think we have Under Armour actually coming up in the odd block. But let's look back at some of those big names we talked about and kind of profiled live on the show. On Friday, we were, and actually earlier last week as well, we talked about Chipotle, obviously. They were pricing at about $20, about 6.25%. They actually moved over $40, 41.26 to be precise. So that one was a 2X mover. Again, these are just to open. As you parse the day, they even got crazier for some of these. Twitter pricing at $1.50. They opened up over $4. They moved even more, so over 2x on that straddle as well. Amazon, of course, that was kind of all the headlines. All the attention was around that one. In fact, I do believe on Friday, Bezos once again topped Bill Gates for the world's richest person. You know, it happened briefly a few months back, and they got corrected very quickly. We shall see if it can last a little bit longer this time. It seems like maybe this time, I'm just going to go out on a limb and say, maybe this time it has some legs. We shall see. They were priced at nearly $40, seemingly rich in hindsight, ridiculously cheap. They were priced in at about a 4% move. It opened up $84. It got as high, I think, as $1.20 or more intraday. Probably more. I'll have to go check the exact number for there. So you're talking at least 3x on that straddle. It's just absolute crazy town. Google, aka Alphabet, they were pricing in $41, or about 4%. They opened up around $40, and so right around in line. But the intraday, they gapped up again more than about 2x what that straddle was. So again, just all sorts of crazy town. Then Microsoft, not to be left out as well, they're pricing in a comparatively paltry 2% or so, about $1.75. They opened up $5.50. They gapped up almost $7.50 intraday. So again, these are the narratives. People come to us all the time and saying, you know, well, there's this narrative you should lean buy or you should lean sell for earnings. A lot of people tend to lean on the sell side, but you have these outlier days like this like Thursday, where you kind of just wipe out. I mean, let's look at Microsoft, for example. You sell that $2 straddle, $1.75 straddle, quarter after quarter. Maybe you keep, if you're lucky, 50 cents of it, maybe 75 on a really good quarter. Hey, I'm looking good. 50 cents, 75 cents a quarter, bam, bam, 4x a year. I'm looking really good. And then bam, you get run over by 3x, 4x in one move. And that's what wipes out 3 or 4 years worth of gains. That's why we say, you know, when it goes wrong, it goes wrong. We were debating this on Vol Views on Friday, you know, and everyone comes out on the data. Ophir, once again, also chiming on the data, saying it's pretty much a coin flip, like we said many times. That this, you win until you don't, or on the long premium side, you lose until you don't. Like you're waiting for a day like Thursday. So it's just so much crazy. Uncle Mike, I know there's a lot going on. You just mentioned Apple. Any of that other stuff really catching your eye out there now that you're slinging the skew and moving around your strategic night and rolling all your puts and all the other fun stuff you're doing out there all day?
Well, the big one that caught our eye is Microsoft. Going into this month, we're doing covered calls on Microsoft, and going into this month, we sold the 8250 covered call. Granted, it's one where I'm happy it's in the money, and we're just going to kind of sit on it till November expiration in this case, because that's the design and goal of the portfolio that we're running for that. But yeah, it definitely affects it, because oftentimes what we'll do is we'll try and sell something out of the money based on the straddle price in a lot of cases. And this is an example to where we got it right by being in Microsoft, but we got it wrong by selling a covered call. Now, in reality, our basis on Microsoft earlier in the year was around the 70 level. So, I mean, no one's really going to complain about close to a 20% gain in a position, but the reality of it is that things like this do happen. And as a covered call trader, in my case, in our case, you need to be aware of it. You need to be ready for it. And the same would hold true if you are an earnings trader, is that it is a coin flip. And like I said, I'll hedge for earnings, but I could probably count on one hand how many trades I've actually done trying to predict earnings in and of itself.
Well, and Mike, this talk about movers. We talked about Amazon. You kind of expect Amazon to be a big mover. You really don't out of Microsoft. Now, the one thing they've done after Microsoft earnings is they come in and just plastered the option premiums. So, one, maybe not allowing you to lick the wounds a little bit of being too right is that there's almost, the Nove 82.5s have sucked out a lot of premium. There's only about 70 cents less than that. And, if you go out, there's some cheapy stuff to buy. Your customer, it can cover this for next to nothing, or buy a couple. The 85 calls, this thing moved, $7, and I can buy the call that's $1 out of the money for 60 cents on an $80 stock. It's cheap. It is an inexpensive trade. You'll like this, Mike. One thing we kind of did was, we looked at all the ones that really, really moved more than we were expecting. And, Microsoft was one where it looked really good for kind of an after earnings straddle to potentially keep moving. It's completely broken out of any range. So it's either going to keep going or it's going to have some little reversion. Google did a little bit of that as well. The other one, I don't know if you have people in Intel, but that's one where we're watching pretty tightly, and we have made note that in the semiconductor space so far this year, when they've beaten, and most of them have, the big move has been right after earnings, and then they have just churned and churned and churned. And so, I'm looking at names like Intel as a name that could just sit here for a little bit and maybe looks really interesting as a put sale. And I'm looking at a name like Microsoft thinking, well, it's either going to go a lot higher or it's going right back to 80.
Was that the one that most of the your hardcores in the chat room there were your mentees? Is that what they were trying to trade up, Microsoft, or were there some other ones? The Amazon move was so ridiculous. Could they not avoid that one? What was the big one catching their eye there on the big Thursday, Friday palooza?
Everyone was playing Amazon, but the smart money doesn't play the hot name. Amazon, the smart play in Amazon was buy calls and sit and sell them an hour later. If you're actually,
you couldn't because you didn't have aftermarket trading.
Booyah! Ha-ha!
Thank goodness.
Take that, both of you naysayers on after hours.
Well, no, but think about this: if you'd done aftermarket if you had gone in with a long position in Amazon aftermarket, you cost yourself money if you traded in the aftermarket because it opened up way ahead of where it was the night before. I think we were talking it was 1,020 when we got done with option block, and then it opened 1,050. So to all those that are like, yay, I want after hours trading, you would have cost yourself $30. Would have cost you money in Microsoft, would have cost you money in Intel, would have cost you money in Google. All these big hot names, everyone's like, I wish I would have gotten to sell. You would have lost every time. So
booyah, back.
So wear it. And that would be my major commentary is that, Amazon, but Amazon was just all momentum. It was a Momo trade, as they would say. There was volatility in some kind of more unique, stable plays, stuff where you're not, stuff where you're able to kind of cash up, pocket nickels instead of trying to pocket gold bricks like in some of these other names where you're either going to make or lose a gold brick. I'd rather risk a penny to make a nickel. And that's the names like Microsoft and Intel and some of those where we're able to do a lot more.
There you go. Also looking here, looks like some breaking news coming out. Trump expected to name Jeremy Powell next chairman of the Fed, replacing his much-loved Miss Yellen, who's going bye-bye. And he's been a Fed governor since 2012. They're saying it's kind of a very safe choice, not really a rockin' the boat type thing. So probably going to keep the policies pretty much in line with what we're seeing now. So we'll digest that as we keep on rolling to digest some unusual activity because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show we break down the weird, the wild, the wondrous, the whimsical, all of the adjectives you could think of for the paper that's coming across our tape here. Remember, we do this not just for show days, but intra-days as well. So head on over to the Options Insider, follow us on social media. You get all that good stuff when we're not here chatting on the old show. Let's kick things off. We were talking last week. It was just rock'em sock'em crazy town for those crazy town puts out there in Tesla, these Jan 2019 50 puts. I had an interesting discussion with someone again over the weekend about these and how just they can't wrap their heads around what these symbolize and how crazy it is. I'm with you. They're nuts. They're crazy, but they continue to trade today, taking a little bit of a break. We said last week, remember, there were thousands going up almost every time we talked about them last week, pushing 33,000 in the open interest right now. So they've added almost 3,000 since just a week and a half or so. Today, taking the day off, only about 36 going up, and the pars also fairly, actually the par is doing about 103, so the par's got about 15,000 and change OI now. So that strip, those Jan pars to the Jan 50s, the 2019, remember, seem to have a little bit of interest, a little bit of action, growing OI on a lot of those strikes down there. So clearly some fund, someone else, individuals, people listening to the show, all of the above, maybe Mr. Sebastian, a Carmen line, who knows? Someone out there is taking a shine to these and continues to do so for fairly decent size, even if today only a paltry 36. These are not cheap either. These are 60-cent puts. So these are not like these are nickel puts or, penny puts. So they're spending some dollars to get 30-odd thousand of these. All right, we shall see. Let's move on to, I do believe this is a newcomer to the Odd Block today, or the Odd Block pretty much ever. This would be Plains GP Holdings, Inc., ticker symbol PAGP, P-A-G-P. If you're wondering what they are, they own and operate midstream energy infrastructure, and they provide logistics services for crude oil and nat gas. So there you go. A lot of those names have been on our radar. So surprise, surprise, that PAGP would make it on eventually as well. This name does usually about 3,500 contracts a day. Today doing about 23,000, 23,290 to be precise. Of that, all but 13 were calls. So about 1,790 and a half to 1 calls over puts. And of that, pretty much of that, what did I say it was? 23,290? Well, about 23,168 came in one mega strike. It was the Nove 21s, lighting it up today to the tune of, I said, about 23,000 and change, including a couple of big blocks. It was 11,400 going up for 42 cents, hitting the bid, and then a little bit later, about 11,000 going up for about 35 cents. So they were hitting these all the way down. Total, like I said, about 23,000 on the day. Open interest, pretty negligible, only about 900 or so contracts. It is worth noting on the open interest side, there are about 22,000 almost open of the Nove 22s. So this could potentially be an overrider sitting on a bunch of stock and maybe deciding he tapped out the 22s, wanted to hit the 21s, maybe legging into a spread. That would also be odd, or it could be someone just coming in and just blasting away. Even though the numbers are close enough to the 22s and OI that it makes me to kind of scratch my head and say, kind of wondering there if there is more to that. And let's look back here. Let's look back at the year that's been out here in PAGP. And as you might expect, right around mid-November of last year, I don't know, something must have happened around that time. Let's just guess what happened in mid-November. Again, this is a crude shipping and logistics company. So remember mid-November last year, pretty active times when we had the big OPEC meeting to decide on the cuts. So this thing took off like a rocket from then and went from about $12.50 all the way up to 34, 35. So nearly 3x or close to it in about span of a session or so. So been a crazy time. Ever since then, it's kind of been slowly drifting off. Took a big hit back in July for earnings, dropped off about $4 or $5 from about 26 down to 22, and it's kind of been languishing in this kind of low 20 range ever since. So if these are indeed overwrites, they're pretty aggressive. So interesting if it's a short spread. Either it's interesting. Either way, it's kind of interesting. Mr. Meatball, let us start with you, sir. What say you about this size, slightly out of the money call paper here? These are pretty much almost at the money calls now. In PAGP, Plains GP Holdings LP.
Oh, well, if you're involved with Plains GP Holding, everyone knows you have to sell directly at the money calls in order to be successful. It's common knowledge. Now, that's not true. But, selling kind of immediately at the money calls is not an uncommon trade. And I do not think that this is anything but some sort of overwrite. It's potential that this guy has a lot at a much lower price and is using call sales at the money to capture yield and to also make sure that he doesn't have, he's able to pull something out of that big win. So that's my guess. The fact that he's open on both, that's a little odd. Maybe he's double fisting on the short calls, or it could be two customers. One guy said, "Hey, Frank, look what I did here. Sold all these great 22 calls." The guy said, "Oh, is that right, Lenny? I like it. I'm going to do the 21s." It could have been that too, but I highly doubt it.
Yeah, nothing begets paper like more paper. Hopefully, for this guy's sake, if he is indeed a size long holder and if he is indeed overriding aggressively, hopefully he had some puts in his back pocket, or he's been super aggressive on those overwrites all the way down, because he's seen pretty much a nearly 50% reduction here since those peak heady days back nearly a year ago in mid-November of last year. So we'll keep an eye on that one. Maybe we'll mark that guy in the to be watched category. See if we can figure out what the heck this guy's up to from an OI and everything else perspective as we move on to a name that is popping off tomorrow. I know one of the ones you guys like to watch a lot. I'm sure a lot of your mentees in your pit chat there, Mr. Meatball, like this one as well. This is Under Armour. They of the infamous sheer leggings fiasco a year or two ago. They were lighting it up today. They're reporting before the bell tomorrow, so hopefully if you want to trade these bad boys, you already did so, because it's kind of too late now. They closed today $14.74, up about 2.5%, so not a bad day here for ye old Under Armours here. They went out pretty wide, so looks like they're pricing in around about $3 for this bad boy here. Actually, they got a 14 half trials, a little more, so about somewhere, actually a little more, actually. These things went out so wide. I hate when they open them up so much after the close. Again, that's why we need some nice after-hours liquidity. Point counterpoint. We won't get into that right now. Instead, let's look at what was lighting it up today before we get into today's paper. This thing averaged about 3,800 contracts a day. Today, doing an earnings-inspired 32,000. Pretty even puts over calls, which is kind of interesting. But what did catch our eye out here, even though the numbers were even, was kind of one sizable aggregation of paper out here in the puts. In particular, the 11 half puts, so about $3 out of the money puts. And these are not even in Nove. These are in the weeklies that expire on the 3rd. So they're expiring this week. Someone came to town to play and play pretty hard to the tune of about 16,000 of these, nearly 17,000 of these bad boys going up today. Started off, looks like they were trading these. They were trading mostly for a nickel. As the day went on, they went up out a dime at 15 cents. They were mostly nickel bid when they started coming in and hitting these, but there was some, because these things, they started going up in small blocks throughout the day. So once that starts happening, the bids and offers start flying all over the place. You start seeing lift and offers, even though it's the same nickel print. But it looks like the lion's share went up for about a nickel. Again, lifting offers there. I think for some of that, a good chunk of it actually, there were some nickel bids. So throughout the day, a couple of big prints. Again, total of about blocks of about 1,000 to 3,600, totaling 16,000 and change. So someone looks like they're wanting to get in here. And a nickel is the price that they chose. OI 0, nothing. So there's nothing open here. So this is obviously pretty active, pretty sizable weekly paper going up here ahead of earnings tomorrow. Let's just look and see if this is indeed opening buy paper or sell paper. That's one of them, obviously. Then we can ferret it out a little bit more what's been going on. And that's actually a pretty interesting strike for both directions. You can see where this name has been over the past year. They were kind of playing a lot higher back about a year ago. They were pushing the 30 handle. Now pretty much about half that, right around $15 today. So clearly not been the best year here for Under Armour. Looks like they got clipped pretty bad back in the January earnings cycle, dropping from about $25 down to about 18.5. So yeah, people maybe revenge of the sheer leggings there. I don't know. Mark probably has more insight into that since his wife is a big fan of all things Under Armour and that sort of fashion. But either way, if this guy's writing to open, if he's blasting away to open on the 11 half strike this week, or if he's super concerned about downside at the 11 half, either way, it's at least a 52-week low, if not longer out here. So, Mr. Meatball, what's your take on all things Under Armour? You think someone's coming in, a stockholder, just scared about earnings, gobbling up some nickel puts? And what's your wife saying about Under Armour these days?
I do think that that's the case. Under Armour is a terrible chart. And when you're talking about sheer leggings, I think you're thinking of Lululemon.
You're right. I am thinking of Lulu.
You're thinking of Lululemon.
I was injecting a little spice that wasn't there. We can play. We can pretend.
Exactly. No, Under Armour has their issues. They are a disaster of a stock chart. And there is nothing about it that looks good right now. Adidas is eating their lunch, Nike's eating their lunch. The only people I see wearing it are little kids that are in 4th and 5th grade or 3rd grade or 2nd grade. And that's because their moms all buy it at Marshall's because it's on sale. Listen, I love Marshall's. I absolutely love TJ Maxx, TJX, great stock. But if a lot of your apparel is selling there, that is generally not a good thing for your company. And I think that is what we're seeing a little bit here of in Under Armour. And I think that there are some reasons to want to buy these puts for a nickel. I would be less than shocked if these aren't these aren't sold at a profit by Friday.
Everyone, by the way, is crushing me on the leggings. J3 Dingle saying, "Isn't that Lulu, not UA?" Everyone's just chiming in. All the live listeners hitting me up. Yes, you are all correct. I was thinking of Lulu. That's why I was thinking of your wife. I know she liked that stuff. But there you say, la vie. Under Armour, maybe they'll have their own scandal, and we could talk about it in such glowing terms. But yes, that is indeed Lulu. Who I'm not sure when they're reporting. Let's pull them up really quick and see when they're coming out. They looks like they had earnings back on the 31st actually, so they're not going to be playing again for a while. So they're off our radar for the foreseeable future. But what is not off our radar is our next victim. By the way, if you guys trade Under Armour, looks like a lot of you guys like that one. Let us know what you're up to. What you think about these puts? If someone is indeed opening on that strike, and they are, particularly to the downside, negative hedging perspective here, that is interesting for this stock and not exactly boding well for you stockholders. Speaking of downside, out of the money puts, let's go to our final name, our final victim here. This is, if I could type correctly, that would be better. There we go. Not too far out of the money, though. This is ENSCO PLC. This is, again, back in the kind of refining drilling area there, an offshore drilling company. Their ticker symbol ESV, closing today $5.41, up a nice 4% out here. Again, easy to move that kind of needle, though, when you got such a cheap name. This name does about 5,000 contracts a day, doing about 4x that, doing a little over 20,000 today, about 4-to-1 puts over calls. And what we saw was kind of an interesting, call it a roll, call it a pile on. I kind of lean on the former, but I could see an argument for the latter as well. It started off with the Jan 5 puts trading for 40 cents in small blocks, a bunch of small blocks, a couple hundred here, a couple hundred there, all the way up, totaling about 5,000 and change, most of them for around 40 cents, most of them seemingly lifting offers. Worthy of note that there's about almost 13,000 contracts open on that strike, which is why it has all the flavor of a roll. And then we're looking a little bit farther out to March. The March 5 puts also pretty active today with 5,000 going up. With people hitting the bids pretty much for, what do we got here, 50 cents for the March 5 puts on the bid, and 70 cents for 5,000 of the June 5 puts on the bid. So it could be a bit of an indecisive roll, taking that 12,000 and change of these Jan puts, which is interesting time to roll. He's got, these are Jan, so he's got a little bit more time on the radar if he wants to stay there, but maybe he decided today, it was today or never. And so take 5,000 off the table and then spreading it out in a little bit of a time tree, time stupid, call it what you will. Or it could be completely additive paper here as well, with paper opening, looking at that open interest, saying, I like that strike, but I want to do a little bit of a time stupid kicker with it. So it looks like net probably buying, maybe closing. Let's say maybe. We won't say probably. We'll say maybe closing on the Jans, and looks like opening for size. No open interest really to speak of in either of these March or June strikes. So if that's the case, then perhaps a bit of a indecisive continued rolling here of the this pretty sizable short here on the 5 strike. Let's look out here to how this baby's been doing. ESV, looking back on the year, it's had some interesting highs, flirting as high as about $12 back right at the beginning of the year, back in January. Obviously, less than 50% of that now, right around 5.5 or even shy of that. Got as low back in August as $4.10. So this thing has kind of been all over the map this year, which makes these 5 puts that much more interesting. These were, if they are indeed a bunch of size short puts, then this guy was in the money pretty hefty not too long ago. Interesting that he chose to keep the same strike. If it is indeed a roll, Mr. Meatball, take us home. What are you feeling on someone potentially rolling some size Jan 5 at the money, slightly out of the money short puts here in ESV out to March and also to June?
I think you've hit the nail on the head. This is one that's moved around some. And, you look at a chart of this thing. This was a stock that was over $10 less than a year ago, and it's now $5. I think somebody sold some puts and was not expecting them to hit this much heat. So, that would be why you'd roll something like this, to make sure to take the heat off a little bit. And I think that's what you're seeing here.
What else I'm seeing is a bunch of questions, so let's keep on rolling into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. It's Monday. It's time for you guys to ask the questions. We also like to ask you guys questions every now and then. We kind of tailing off what we were talking about a couple of weeks ago, what you guys were just referring to, alluding to on the show earlier about after-hours trading, a hot topic with a lot of you guys. A lot of you want it in options. Some of you don't, but most of you do. So we asked you, hey, give us some details. If you really want this thing, how should we do it? Should we do a pilot for earnings season? Should we do just the top names only? Or some sort of basic limit order book or some others? And you guys had some other suggestions. I think I read those off last week. Well, finishing up the week, it was top names only winning with exactly half, 50%. So let's limit it to the Amazons, the Apples, the Googs, those types of names for now, and maybe see it that way, which in the option space is really only about 20 names that are doing about half the volume. So you knock out the indexes, you get even fewer. So interesting stuff there. 27% saying a limited pilot for this time of year earnings season, kind of a rolling pilot. It might be a little bit confusing, but I could see that maybe working too. So others saying to do it like the stock, is like a basic order book, matchup orders. You get it, you don't, you don't. And others, like I said, a bunch of you had other ideas for that. This week we asked you, hey, everyone's talking Bitcoin. They got Bitcoin on the brain. Just blew past 100 billion in quote unquote market cap. I'll leave you to debate that market cap number, if it means anything or not. But the interesting thing is, let's talk about it from an options perspective. There's no options yet. There's futures potentially coming from the CBOE that haven't been approved yet. Hopefully, if those get approved, sometime down the road, we'll have options. But if the options were listed on Bitcoin right now, how would you trade them up? Lots of interesting ways you go. We gave you some basics. You can buy calls or call spreads, so your basic bullish trade. Buy puts or put spreads, your basic bearish trade. You want to come out and sell covered calls, you long a lot of Bitcoin, you want to get an exit, or others / you hate crypto. You get some interesting ideas on that front already as well. Tony Varial saying HODL, H-O-D-L. No idea what that means. It might stand for hold on for dear life. I don't know. I'm not up with the hip lingo here. Contra Chaos saying called broken wing butterflies is how he would trade it. So interesting, to each their own. Mr. Uncle Mike, we'll start with you. What are you feeling in this crazy, fluffy Bitcoin land? How would you touch it? Or are you saying, I hate it, I'm not touching it with a 10-foot pole?
I don't know if I'd say I hate it, but if I were to touch it, which I'm actually not, I'd probably go with a call spread, just because whether it's a success or a failure is a different topic or a different conversation. But I do feel that there's going to be some type of buzz and success with it. I think it still has more of that to come. And I think that a limited risk call spread would be the way to go with this. It's limited risk, and you're neutralizing a lot of the risk by making it a vertical call spread. So I think that vertical call spread is how I would play it if I were to do it.
Yeah, I gotta imagine those upside call wings would be pretty juicy, so you probably could leg into a nice debit spread for a fairly attractive level, maybe even approaching or perhaps exceeding the frothy old Apple of a few years ago, pushing 700 days when you could do verticals. Not quite for not quite for credits, but you could get close. Mr. Meatball, what say you here on the ever-present, encroaching world of Bitcoin and the options? How would you trade them up at Carmen Line?
Yeah, I think I would want to do some sort of long call play. I don't know what the implied volatility would be, but no matter what number it is, it's probably too cheap. So I'd be doing some sort of in the money straddle type thing where, if things really tank, I don't lose, but I'm capturing most of the upside. That would be my plan.
There we go. So our audience here, they kind of evenly split. They kind of go back and forth. It's only been up for about an hour or so, listeners. You got all week to weigh in. If you haven't, head on over at Options. Make your voice heard. Here in the early voting, puts and put spreads having a nice little lead, 40% to 33% only for the upside of the call. I got a feeling the crypto bulls, once they hear about this, are going to be piling into that side. 13% selling some covered calls. I can see a use case for that. Kind of hard to get an exit in crypto these days. 14% saying the other category or hate. I just read off some of their suggestions here. We got a bunch of questions. Some of these are a little more lengthy than others. Here's one from Beverly B212. So I guess she's coming out of New York. She wants to know, is it better to buy off lows or catch momentum? I guess she's a technical person. She knows how much we love technicals here. Tuning into the right show for that. And I'm a brand new beginner on this. Oh, she got a whole order here. She entered here. She's buying, let me see if I can interpret what's going on here. She's trading Merck. She bought the Merck Nove 55 calls. And then, so she bought calls in Merck, the Nove double calls. They expire in November, so the regular November Noves. I guess she wants to know, how's that looking? Well, let's look up Merck here today. Merck taking it on the chin a bit today, off about $3.50, or about 6%. Closing today about 54.71. Hence, I'm guessing why you came in to scoop. Buy off lows or catch momentum. That's such a subjective thing. You ask 5 different traders, you can get 5 different answers. If you think this thing's oversold, then that's the way. I think we would probably caution you. You're a newcomer, so you probably haven't tuned into the show before. But we probably caution you, as Uncle Mike was just saying, maybe a vertical might have been a better way to go than just coming out and naked buying the calls. So maybe you establish a nice little range where you're comfy selling the upside. Then you take some of that premium. Like I'm looking here, these double calls are trading. Oh, they're trading for about 90 cents, about $1. So you put $1 on the table. It's not exactly cheap. You could turn around, take about 25 cents of that off or close to it if you do 57 halves or a little more. So things like that. You could also find other ways. Maybe if you're comfortable buying Merck at a lower level, you could turn this into a nice bullish risk reversal. Sell the puts, buy the calls. That's always a fan of mine. And then you have the upside call kicker. So you got the vertical call spread and you got the short puts on the downside. Again, at a strike you're comfortable buying. And then you have a nice, very low, I think Mr. Rocklopson might even call that, not quite a juice for free, but a juice for a low cost trade. I don't know. Mr. Uncle Mike, are you a fan of coming in and scooping these names on these lows? And what do you feel about this upside, or actually at the money call buy here in Merck?
Well, I mean, Merck's gotten had a little bit of a downturn, we could say recently. I like Merck as a long-term stock, but once again, I think that just the way with which to do it is by going with a call spread. If you're bullish on Merck, then I think that with if vol is higher, and this is kind of theoretical 101, I think you're better off. And if you're bullish, if the stock's going to go back up, in theory, vol's going to become lower. So I'm a fan of just doing a vertical call spread because that kind of takes away the factor of, it doesn't take away fully, but it kind of helps mitigate the factor of vol going against you when the trade's going for you. To quote the Viceroy, there's times to where you can be right on price and wrong on volatility and still lose money. But more frequently, there's times to where you can be right on volatility and wrong on price and still make money. So it doesn't happen like that all the time, but I think that when looking at it, usually a spread is typically a better way to go, I think.
Mr. Meatball, you're a fan of scooping things intraday using options for kind of swing traders. How do you like to do it? I know the out the money call thing, not your favorite play, but how do you like to use options to kind of capture these kind of momentum plays?
Yeah, I mean, if I'm doing intraday stuff, I think shorter. If I'm literally day trading or using intraday, the really short dated stuff is what I want to deal with. Why bother? I just want gamma. I don't want to deal with volatility and Vega and all this. I just want gamma. So in that case, then, we're really talking about, trading weeklies or dailies. When I've got an idea, a lot of times I'll go in and buy SPY. I think we're going to rally over the next couple days. So what do? I buy SPY options expiring Wednesday. Or I buy SPX options expiring tomorrow. There's all sorts of opportunities to do that kind of trading. And that is where I think when I'm day trading, that's the way I usually approach things.
Looks like there's a happy ending to this story, actually. She just chimed in saying she actually flipped it within half an hour for $140. So there you go. Options as a swing trade. Good work, Madam Beverly, what her name was there. We got all these questions that are so lengthy here that we can probably spend a lot of time. I'll try to do them quickly, squeeze some more in. James Powell wants to know, this is an easy question. Another one, kind of like a religious preference. It kind of breaks down by party lines. He wants to know, what is the best options trading platform for active traders? What was that all? There's so many. We started, it seems like each has kind of specialized these days. There are some that aren't really geared for the active. Like we just had the trade station folks on here not that long ago, and they were talking about how they still charge for closing out shorts and things like that. So if you're pretty active on the short premium side, that may be a platform probably you may want to steer clear of. We've also talked, we used to have the OX guys on here and Schwab. That's a good platform, but it's kind of pricey. So bear that in mind if you're kind of slinging those. Plus, they just migrated over there to the main Schwab platform, so you may or may not be a fan of that. We've yet to see what kind of the OH or other buddies there at the OH kind of E-Trade, what their kind of joint platform is going to look like. Right now, the option house stuff is still pretty good, but we want to see kind of what maybe the merged entity is going to look like and how it's all going to work and stuff. So there's still a lot of questions out there. Scottrade and TD, how all that joint thing is going to work out. So it seems pretty crazy. I know Mr. Meatball, and I played on him a little bit. I haven't done a lot. I know you like the Lightspeed, which is kind of based on the live vol, which is very much geared around the options folks. Is that still your kind of go-to pick, or what are you using? You kind of being agnostic and playing with a bunch these days?
I do still use a ton of live vol and Lightspeed or live vol volatility or Lightspeed vol trader, whatever they're going to call it. But I'm also starting to play around with Option Hawk, which I think is going to be really interesting. And based on that pricing model, with how much I trade, it'll save me a ton of dough. And it actually is a nice platform. And, it's early on, but they've got guys working on it. It's getting better and better every time I look at it. It's a nice little platform.
Yeah, they were on our live show from your Option Pit event. I just saw it at your event. I haven't had a chance to kick the tires yet, but I love seeing new players in the space. They have a front end they're basing off the tradier back end, which people like. So, that's an interesting idea. More players in the space is always good. Obviously, we got our friends over there at Ally Invest, formerly at Trade King, who've built up their platform quite a bit, and it's also a low-cost provider if that's a very sensitive thing for you. Some people have chimed in saying they like the Doe stuff. I haven't played with it personally, but I know that's geared, or again, closing out shorts for free and a lot of things like that. So it's kind of a pick your poison. It's kind of hard to go wrong unless you really have a strategy that you really like, and the platform isn't. Like, for example, back in the day, the E-Trade platform for options was not a good go-to. These days, with Option House on board, it's a different beast. So I would be less hesitant to recommend them. So it's harder to go wrong. Mr. Uncle Mike, I know you have a lot of thoughts, and you also have a lot of irons in the fire on this space. Where do you like to route people who come in with this question?
Well, I think that with a lot of the brokers out there, brokerages have become so much more commoditized over the last 10 years. I remember in the early days of Options Express, it was just like the thing that, wow, you can do a condor on one screen. Wow, that's amazing. But it's obviously no big deal right now. So I think that it's a question of personal comfort. The main thing that I like is the most important thing to me, even more so than commissions, is how do they work with you if something goes wrong? Because something will go wrong at some point, And one time I had a group trade go wrong with a broker. I'm not going to mention any names, but it rhymes with interactive jokers. And they basically said, well, there's nothing we can do to help you. Just try and do your best. And so I basically had to manually enter in every individual trade for every client that I had, so we didn't go unhedged going into the weekend. And by the grace of God, it worked out, and I got them all in. But it was just a scary moment to me at that stage in my career. So I think that if you work with someone to where if something goes wrong, they need to have a good customer service support staff to help you and work with you. I think that's more important than anything. That's more important than not paying an extra nickel in your commission or something like that. Because if you got to pay an extra nickel or dime or whatever it is, yeah, you don't want to make the broker rich if you can help it, but a lot of times it's worth it if you can deal with an actual living human being.
Yeah, that's a good point. I mean, I mentioned that it's hard to make a mistake. You can make a mistake. IB is good for the active, high-end guys. If you're a beginner and starting to become more active, IB is not the choice for you because Mike said they will not hold your hand at all. They really will not be there to answer your question. It's not what they do. They're very much on kind of just the execution and and cranking away on the high-end guys and the algos and that sort of stuff. So not very much. So you need someone to hold your hand, one of those other brokers. Clearly, maybe if you ask these questions, give us a little more specifics of what you like to trade, or your strategies, your approach, so we can maybe tailor it more rather than, because what you're getting now is kind of just our own personal preferences. Those are fine too, but if you give us a little more info, we can give you a little bit more specificity. All right, we got to keep on rolling. Coming up, we got so many more questions. We'll squeeze more in, don't worry, on Thursday. Meanwhile, it's time for our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like we said, it's still earnings season. Things popping off all kind of week long. So pick your poison. You got it, like I mentioned, not Lulu, but Under Armour popping off tomorrow. We got Lumber Liquidators before they open as well. They've been an interesting, volatile name of late with all the issues going on with them. BP as well coming out tomorrow. We got everyone's favorites, Tesla and Facebook after the bell on Wednesday. GoPro as well. Fitbit as well after the bell on Wednesday. Groupon before the open. What's left of them out there as well. And some crazy fruit. I don't know. I think they make oranges and also apples on Thursday after the bell. So still some big ones. A Blue Apron before the bell. All sorts of ones to play with. Let's start with you, Mr. Uncle Mike. Also Activision Blizzard. I know one of the Rock Lobsters, formerly favorite. I'm not sure if he's still trading out there, but he used to like that one. So a lot of interesting names. Mr. Uncle Mike, we'll start with you. I heard this produce company is kind of on your radar. You like their fruits and vegetables?
Yeah, they serve very nice fruits and vegetables. Macintoshes, Golden Delicious, Honey Crisp, Granny Smith, all sorts of good things. So, yeah, definitely watching Apple. Want to see how things react to that. Apple's at a pricing point right now to where with today's close, they're really close to the all-time highs. In fact, they're at new all-time highs, and so want to see where they can go with it. An earnings announcement can be quite helpful for Apple, but we'll see where they're at. I think the real news with Apple, though, ultimately is going to be the next quarter when they see how they do in what's typically the most important quarter for them, that is Q4. But the other thing that you can listen for tomorrow is guidance on how they feel they're going to be doing for Q4 as well. Normally, they they have a tendency to sandbag when they talk about that, but we'll see what they have to say when this earnings announcement comes up.
They were the masters of sandbagging for a long time. There was no one better at the game than Apple. Oh, we're not going to sell another iPhone. Oh, wait, we blew the doors off this quarter again. Surprise. They kind of perfected that art. Maybe not so much these days, but let's see if they can get that kind of put that bloom back on the rose. Mr. Meatball, what are these names catching your eye? Perhaps one we didn't name yet.
Yeah, there's a lot of interesting ones that are believe it or not, I've bagged on Groupon for so long. I found myself there. I'm finally starting to look at the app now that they've kind of changed it so you don't have to pre-buy everything. It's a little more interesting.
I thought you were about to say you're about to load up on Groupon for a Carmen line.
No, but I do use it every now and again now. It's interesting. I found myself actually playing with it. So, we've got a lot going on this week. We have non-farm payrolls. We have ADP. We have the Fed governor being announced. I believe there's a Federal Reserve thing going on. We've got tax reform, plus we got earnings. I think that things could be interesting. Things could be interesting over the next couple of days.
Things are interesting. Unfortunately, we'll have to table that interesting conversation until our next show on Thursday. Of course, there'll be shows coming off on the network throughout the week, so stay tuned for those. We'll be live again for this show on Thursday. Trying to think, maybe some others will be live between now and then. We'll have to work it out and see, some interviews, some other stuff. Sometimes the guests get scared when you flip the live switch, so we keep those to recorded only. But every now and then, you never know, we might surprise you. So grab that Mixler link, follow us in Mixler, and you too can be instantly notified the second we go live with some fun new stuff. But before we go, back around the horn one last time. Uncle Mike, if I'm intrigued by all this different broker selection, but I'm saying to myself, I hate that ticket charge, what can I possibly do?
Well, you can give me a call, and I could possibly help you to find you something to where you can trade at 35 cents a contract without a ticket charge. Or even better, if you are one of those people that really doesn't like interest rates right now and is looking for possibly a CD alternative type of thing, not a CD, but something that would be an all-conservative alternative, give me a call and learn about my SKU fund, or listen to the Option Block episode on October 6th when I talked about it. But if you'd like to give me a call, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
And Mr. I almost called you Rock Lobster. Mr. Meatball, what's cooking in the land of the pit as well as the Carmen line?
Things are good. Things are real good. Yeah, we've got a Carmen Line Capital. We're working on our second fund. Plan is to launch beginning of January. Obviously, qualified investors only. And at Option Pit, I'm about to do a webinar in about 1 minute. And then we should have our EasyVix course starting in the next week or two. I'm going to be in Las Vegas for the Traders Expo. I had 50 copies of my book, which has not gone to print yet, printed for me. So I will be handing out a few of those only at Las Vegas to get things going. So if you're in Las Vegas for the Expo, come and find me, and you may find yourself a new copy of Trading Options for Edge.
There you go, listeners. So exclusive, I don't even have it yet, so you can get your hands on it over there at the Traders Expo. If you're in the chat, head on over to optionpit.com right now. Join the live webinar. You may be so inclined. Also, if you're all you guys asking us about which brokers you like, hit up Uncle Mike. If you're an active guy and you've listened to the show, so you probably are, he might be able to save you a penny or two, or perhaps many more, with the no ticket charges, and just be active. And maybe you want to hit him up every now and then, help him roll your puts for you. Either way, give him an email there, give him a shout, m2saw@rcmfs.com. And on behalf of the Meatball and Uncle Mike, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show, and of course sending in such great questions. Keep them coming. We'll get to more on Thursday, I promise you. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.